Hey there, everyone. Today we're going to talk about Wall Street's sudden interest in becoming your landlord. The game's changing for them, and they have some very compelling reasons for choosing to invest in residential and commercial rental real estate. Reason number one, changing market dynamics. So Wall Street's typical revenue streams, they're being very disrupted right now. They used to be able to rely on you to go into a physical location and buy stuff, but now due to online shopping, they can't rely on that anymore. They used to be able to rely on you to actually go into a place of work, not only for that location, but also for the little ancillary businesses that surround where you work, like the coffee shop or place you go for breakfast or lunch, or the bookstore. They can't rely on those revenue streams either. So they finally woke up and said, what's more reliable than anything else? Someone having a place to stay. That's something that you'll always have to pay for. So now they want to get involved in that and be the person to rent a place to you. Now, Wall Street realizes that unlike many other assets, they can acquire real estate with very little money out of pocket by using leverage. So if they want to take $10 million of your pension money and go buy Coke stock or some type of bond, they actually have to spend the entire $10 million. That's not the case with real estate. They only need what, maybe 20% down or so? Think about when you went out and bought your home and it cost $200,000. You didn't have to come up with the whole $200,000. You only maybe needed 20%, and the rest a bank would let you borrow. It's the same way for them. This leverage allows them to control millions of dollars of assets with very minimal upfront capital of their own. So now the question becomes, how hard is it for Wall Street to go obtain leverage to go buy all these properties? It's actually pretty easy. They have all of our pensions and 401ks to use to do it. So let's think about how banks make money. Banks make money from deposits. So if Wall Street goes to a bank and deposits $10 million there, the bank can then lend that $10 million to, say, the tune of 90 to 100 million to make money. And in exchange for that, they'll let the depositor or Wall Street borrow a portion of that to do whatever they want to do. So now Wall Street knows I can go let my money sit in the bank, not use it, and use the bank's money to go out and build these properties. And because I'm building so many of them and giving people good deals, they're going to give me cheaper prices. So I can build these properties for, 60 to 65 cents on the dollar. And then when the property is done, I can also go back to the bank and take a loan out, again, using leverage, take a loan out on the value of the property to hold it, also while not using any of my money. And if the loan that I take exceeds the cost, then that money that I made in between that spread, I don't have to pay tax on it because debt is tax free. Now, Wall Street's always been able to use leverage in this way to invest in real estate. Why are they doing it now? What changed? Well, we already covered what changed initially on the revenue side. They're losing their traditional ways of making money and they're seeking new methods, hence the stability of rental real estate. What changed on the other side are the tax laws. So in 2017, the tax laws changed, which expire in 2026. And they put two shouldn't be fair, too good to be true laws on the books that enable Wall Street to go out and become your landlord. The first law is bonus depreciation. So the government, which encourages people to invest in real estate, they're giving people or businesses an upfront tax deduction worth 20 to 25% of the value of a property. Now, again, we previously covered how Wall Street can go out and buy and build these houses for zero money out of pocket. On the back end, once they're done, the government's going to give them a 20 to 25% deduction on the value of that. Sounds like a pretty good deal, right? It actually gets even better. So Wall Street, they typically make their money from investments. Investments equal capital gains. There's a law on the books now called the Opportunity Zone Law that lets you defer paying any tax on your capital gains until the end of 2026 if you invest those capital gains in real estate in certain areas where they want you to invest in, of course. Now, the real estate that you build from that capital gain investment, and again, you can use leverage on that as well. If you hold that for at least 10 years, when you sell it, you don't have to pay any tax on that. These are the best tax laws that we probably ever had in the history of the tax code, and it's arguably the best time to invest in real estate before these laws get off the books. Now, they currently have a vote in place to extend bonus depreciation until the end of 2025. It already passed the House, and we'll see how the Senate votes on it. So why am I going over this now? Two main reasons. Reason number one, I want to encourage everyone to go out and own their own homes. As long as Wall Street is your landlord, you're not going to curb inflation because your rent will continue to rise, because they're always going to be profit driven, and they want to make sure they make as much money for their investors as possible. Now, 10 years from now, when Wall Street starts selling off these portfolios, whoever the buyer is, isn't going to have these tax laws on the book to subsidize their cost. So they're going to have more to recoup, which means they're going to charge you more in rent. Now, when you own your own home, you'll typically have a fixed rate mortgage, at least that's what you want to get, that will lock in the majority of your housing costs. So you can beat inflation that way. You'll also get to deduct the interest for that home, which you can't deduct it by paying rent. And you can also deduct your property taxes, which you can't deduct if you don't own the home like Wall Street does. They deduct their property tax deduction, but they still pass that cost along to you with a margin attached to it. Reason number two, what they're doing, the play that they're running, everybody can do the exact same thing. There are no magical books on the rules for rich people or corporations or anything like that. The tax laws are the same for everyone. You can do the exact same strategy to invest in rental real estate for yourself to increase your wealth. So why aren't we doing it, and when will we start? Think about it. Peace.